Hey everyone, welcome back. So I hope you guys are having a great Monday. We got a bunch of releases for quarterly results, Bitfarms, Marathon, but we're going to get into Marathon today. We also have Mawson and somebody else provided theirs, but we'll get into those tomorrow. So here's what we want to do. Marathon obviously provided their results. They also stated in there their BTC-backed loan, got capital calls for more BTC. We'll take a look at it and see why the heck they did it. But as always, not financial advice. You guys know the drill here. I'm investing in following coins and companies. This is for entertainment only. Do your own research as always. And if you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. So let's get into the nitty gritty and then we'll get on with the numbers actually. So here is their report from today. They actually provided it. And I can see why they delayed reporting it because of the BTC-backed loan getting calls on it. But this is also pretty interesting here. So Compute North bankruptcy. So on September 22nd of this year, Compute North filed for Chapter 11 bankruptcy protection. Compute North provides operating services to us and hosts our equipment in multiple facilities. We deliver miners to Compute North, which then installs the equipment in several facilities, operates and maintains the equipment, and provides energy to keep the miners operating. In Chapter 11, Compute North is currently seeking to sell up substantially all of its assets. That's not good, including its direct and indirect ownership interest in the facilities that house Marathon's miners. Compute North may also seek to assume and assign the Compute North agreements to which Marathon is a party to one or more third-party purchasers of Compute North assets, or it may seek to reject such agreements. Accordingly, Compute North's Chapter 11 case could cause a disruption in services provided by Compute North to us and therefore could have an adverse effect on our operations in the facilities managed by Compute North. So this all depends on what kind of rate they're getting. If the new owner of Compute North facilities sees that the rate is maybe lower than it should be, they may want to renegotiate the terms, or they might just kick Marathon out. So that's not a good sign there. So that's one of the bad things of going with the hosting provider. You're at their mercy. All right. If you have your own facilities, kind of like Riot or a lot of the other miners, you're in control. This is now up to Compute North and whoever purchases Compute North's assets to determine if Marathon is going to be able to continue to mine there, which is unfortunate. So that's a big red flag there right now. And I think the stock hasn't taken that into account much for it. It's still over $1 billion worth company, and I'm not sold on it just yet. Okay, so that's one bad part of it here. Next part, jumped the gun here. Next part is this. So they also posted this. We may face capital calls as a result of our existing loan agreements. During October 2022, we borrowed an additional $15 million under our RLOC facility and provided an additional 3,933 Bitcoin as collateral, which increased the company's collateral balance to 7,821 Bitcoins. On November 9th, 2022, Bitcoin prices declined to a new yearly low, which triggered a capital call of an additional 1,669 Bitcoins to cover collateral for our 50 million RLOC and 50 million term loan borrowings, bringing its total collateral balance to 9,490 Bitcoin. And that is not good. The company's remaining unrestricted balance is 1,950, and any further decrease in Bitcoin price could cause us to have to pledge all or a substantial portion of our remaining Bitcoin holdings. There is no assurance that if there are continued marked decreases in the price of Bitcoin, that our remaining unrestricted Bitcoin will be sufficient to cover further increased collateral requirements, or that if not, that we would have sufficient capital to cover any resulting capital calls, which could result in our not being able to maintain liquidity and could force us to consider reorganization or liquidation. Not good. My biggest question on this one is, why did they do it? You know, you would think that they would have learned from this past summer with a lot of the companies that did have BTC-backed loans, that was not a good thing to do, especially that we don't know where Bitcoin bottom is at, and yet they still did it anyways. Why didn't they just sell the Bitcoin? That would have been, you know, obviously the price of Bitcoin is way down, so I understand that part of it. But the thing is, you're not being affected by Bitcoin going down lower, which it has right now. So we're at 16,500 something around there. If Bitcoin goes down to 12,000, they're going to have to pledge pretty much everything that they have. So just, to me, it's just crazy. Let me know what you guys think down in the comments down below. Love to hear what you guys think. But to me, this was just a bad call on their part. They should have learned from what happened this summer and spring. You know, That didn't work out great for a lot of the miners, but they did it anyway. So that's just my little rant there. Okay, let's take a look at the numbers that we have for them. And I updated my spreadsheet here, which is available to all my Patreon members, and this will be uploaded later on today. But here's what we have for Marathon right now, where they stand. I have them at currently 116 million shares outstanding. Stock price is at $9.52, market cap of $1.1 billion. I think they're a little bit overvalued right now, maybe, based on just a couple of things that they have going on for them right now. They're at the mercy of Compute North, the possible calls on BTC for their loans. It's not good. So they got a lot of things going on that just I'm not a fan of. If they had their own facilities, I think this would have been a little bit more fairly priced right now, but they are where they are. Current hash rate, 7 exahash. That was at the end of October. Future hash rate is going to be 23 exahash, so they still have quite a bit of growth left in them. They did say they want to get to the 23 exahashes by the end of Q1 of 2023, I believe. If that's the case. Okay. They did report earnings of, let me see here. Well, I forgot to update this. We were waiting on the results here. Let's see here. What were the revenue earnings? Assets, liabilities, where was it? Revenue. Revenue was 12.69. Let's just copy this over. See if we can get this to work. Copy. Go back up here and see how close I was to it. Oh, I was a little bit off, but not too much. Take that. So I was off by 3.72%, which wasn't too bad. I'd like to stay under 2.5%, but that's not too bad either. Compared to the second quarter, I was off by 8.73. So we're getting closer to that. We're using the Bitcoin average price for August and September. July might have been the difference here for that one. So let's update the numbers here to include the latest figures that we do have for them. That's the current quarter that we're, no, that would be this one over here. The current quarter that we're potentially in right now, and the last 3 quarters are going to be those that are reported. And we can add onto it here. Let's see, let's move this one down, that one over here, and we'll add on the first quarter in here as well. So now we have them at 64 million total, or 129 million total for the year so far. It looks like 50% net income with a P of 20. We're looking at $11.11. That's at 50%. At 75%, we're looking at $16.67. And they are at $9.52. So we would think they're kind of undervalued, but I actually think they're kind of overvalued based on the concerns that I do have for them. So they are trading right now at, let's see, a pretty high multiple compared to the other miners. They are at roughly 17 PE right now, where the other miners are at 1, 2, 3 PE. So I think they are overvalued based on where things are right now. Okay, let's take a look at the numbers that we actually do have for them. So we'll get into we can do this right now. So these are the numbers that I track for them, kind of figure these out based on the information that we do have for them. So BTC mined for Q3 was about 616 BTC. Starting hash rate was about 700 because they had fallen down because of Mount Harden facility was down. So they were at the end of Q2 at 700. They've gone up to 3.7 exahash by the end of September. Average hash rate was 2.2 exahash. Hash rate decrease was 3 exahash, which was good. BTC mined on average per exahash was 280. So big decrease here from Q2. Cost to mine 1 BTC was 131,000. Cost to mine 1 BTC minus depreciation was, I gotta have that somewhere wrong in here. It shouldn't be 22 million. I think it should have been like closer to 22,000, I think. I'll have to look into that one. Enterprise value was 1.1 billion. Debt to equity 0.079. So that did decrease a little bit here from Q2, which is good. Current ratio also increased a little bit to 5.2 from 4, so that's good there. Revenue was 12.69. General administrative, let's see if we can pop that in there as well. That was 12,352,000, so that's 97% of their general administrative costs was towards the revenue. So that's a lot. They were at 50% in Q2, 27% in Q1. Obviously, Bitcoin price has been coming down. As a result, their general and administrative compensation is 97% of their revenue. So that's really high. Okay, current assets. Cash and cash equivalents is 55, so that went down a little bit here by about, 31 million. Restricted cash, 8.8, so that actually went up. Digital currencies went down a little bit here, 226. Receivable from sale of equipment, so they sold some equipment, about $1 million on that. Subscription, nothing there. Deposits, 22.5 million, that's down from Q2. Total current assets is down 240 million from 362 million. So that is, it's not bad, but it basically means they're paying off some of their debt. So it's down to 240 million. Now, property and equipment went up to 403 million from 314. That's good. Advances to vendors came down, so they are paying that down. They're getting miners installed as a result of that. Investments was up to 37 million roughly. Digital currencies, 70 million restricted. That's probably increased now since they got called on it. They had to put in more, so it's probably closer to 100 some odd million. Long-term prepaids was fine. Long-term deposits, 26. So they moved stuff around a little bit here from the previous quarter. I think it was the long-term deposits or something I moved around here. The rights of use was 1.3, that's fine. Total other assets was 1.2 billion. So that's total for those numbers here. Total assets is 1.4 billion. It's down from Q2 of 1.5 billion. On that, liabilities did decrease to 19 million from 51, so that's good. Accrued expense, that's fine. Legal reserve payable was 21 million, almost 22. And this is in regards to, I believe, the Compute North filing bankruptcy and some other things that they're dealing with right now. So that's for the legal reserve, which is not good. Operating lease liabilities went up quite a bit here, doubled pretty much from Q2. Current portion of accrued bond interest, 2.8 million. Accrued interest, 0 on that one. Total current liabilities is 45 million. It is good to have a nice decrease here from 90. So that did decrease by about half. So that's good. Convertible notes, about the same. Term loan, 50 million. So that's a new one there that they got into just this past quarter. Operating lease is about the same. Tax deferred liabilities is 22 million. So total long-term liabilities is 805 million, and total liabilities is 850. So that looks to be about the same here from where it was prior. Oh, because a term loan right here. So stayed the same because of that. And then what do we got here? Liabilities, stockholder equity went down a little bit to 625 million from 659. And total liabilities and stockholder equity went down also a little bit here to 1.47 billion from 1.5 billion. Now, mining revenue, 12.6 million. They had 24 million. The reason is because Bitcoin price has come down. So we know that that's to be expected. Everybody's down pretty much for the Q3 here. Cost of revenue did come down a little bit here to 13.7 from 16. So that's good. Cost of revenue minus depreciation and amortization was up a little bit, 26.2 from 24. General administrative was down a little bit. Was down 300,000 from Q2, but still way up there. Legal reserves, we have it in here again. Impairment of deposits due to vendor bankruptcy filing, so about almost $8 million on that. Impairment of digital currencies down 5.9. Gain on sale of equipment, net deposit 31 million. And impairment of loan investment due to vendor bankruptcy filing, possibly 31 million. Ouch, that's not good. Let's see, what else do we have here that's kind of interesting. Operating income loss, 81 million from 178, so that's better than it was. So that's good there. Let's see, what else do we have here? So income loss before income tax, expenses or benefits. They had 181 million loss in Q2, 75 million in Q3, so that's better. And they lost 65 cents per share diluted and basic. And we have 116 million shares outstanding, which is what I show for them right now. So there are some improvements, obviously, in the Q3 numbers. There are some things of concern. One of them is being the BTC-backed loans. Those, they need to figure that out. Either they need to sell those things and get out from under them, do whatever they can. Because if Bitcoin does go down to 12,000, they're going to be ponying up pretty much everything that they do have right now just to cover that BTC-backed loan. And the other part of it is Compute North. We really need to see that get figured out, depending on who the new buyer is going to be. And, well, we just need some clarification and some stability in that. And that might not be anytime soon, I think. That's going to take a while before they get a buyer on it, or if that even happens. And yeah, we'll just have to see. Let me know what you guys think of the numbers here for Marathon. Two things, like I said, I'm not happy with the debt, BTC-backed loans, and with what's going on with Compute North. That's a big unknown for me right now. And them being just way overvalued right now with the current market. So I'm not a buyer right now, not financial advice. Do your own research as always, but be careful out there. And that's it. Next video is going to be up on Bitfarms, so stay tuned for that. Thank you so much for watching. Love you all. Have a great night. I'll see you guys in the next one.